Hello and welcome to the day ahead. It is Tuesday, May 3rd. I'm Andrew Gagan. Let's go straight to Wall Street. It was a turnaround story for US equities ahead of the all-important Fed meeting on Wednesday. As a late-stage tech rally helps support the broader bourse, high-growth stocks such as tech have been pummeled this year as a result of traders adjusting for the high interest rate environment, with losses accentuated in recent days by a number of disappointing earnings reports. Well, taking a look more specifically, Pfizer shares slipped after a large trial found its COVID oral antiviral treatment, Paxlovid, was not effective at preventing infections in people living with someone infected with the virus. Activision Blizzard climbed more than 3% after Warren Buffett said that Berkshire Hathaway had taken a 9.5% stake in the company. And Spirit Airlines took a nosedive after the ultra-low-cost carrier rejected JetBlue Airways' $33 a share takeover offer, saying it had a low likelihood of winning approval from government regulators. To fixed income, US 10-year yields touching 3% for the first time in more than 3 years, ahead of the key Fed meeting, a psychological milestone that could have major implications for other financial markets. And the countdown to the Fed meeting well and truly underway, with an all but certain 50 basis point hike baked in, with the move expected to kickstart a period of aggressive rate hikes from the US central bank to counter runaway inflation. Traders are also positioning for the launch of quantitative tightening. To Europe, a bleak start to the month of May after equities were smashed by a brief crash amid thin trading volumes due to a holiday in the UK. The Stoxx 600 falling as much as 3% earlier in the day, with the Stockholm benchmark index slashing 8% in what brokers said was a flash crash or an erroneous trade. Well, taking a look at the bigger picture, some of the other data on the docket in the US factory activity growing at its slowest pace in more than a year and a half in April amid a rise in workers quitting their jobs, and manufacturers are becoming more anxious about supply, while the S&P Global PMI missed forecasts and construction spending inched higher in March but still below consensus. On currency markets, the greenback continues to hold near a 20-year peak against a basket of currencies ahead of the expected 50 basis point hike by the Fed. Though the chances are seen as low, some investors are watching for the possibility of a 75 basis point hike or a faster pace of balance sheet reduction than currently expected. Now, the euro dropped after fresh data showed Eurozone manufacturing output growth stalled last month as factories struggled to source raw materials, while demand took a knock from steep price increases. And in the crypto space, the majors remain in a trading range. Bitcoin below $39,000, while Ethereum well below $3,000, having lost close to 5% over the past week. Bringing it back home, it could be an unpredictable session ahead for the Australian equities, with SPI futures indicating yesterday's losses will continue. However, given the sharp reversal on Wall Street, local investors may be in a more buoyant mood. Global oil prices rose on expectations that a European ban on Russian crude imports will hit supply. However, that was countered with weak Chinese factory data, which is likely to impact demand. Brent crude rising by close to 0.5% to $107 a barrel. Iron ore futures price largely unchanged at $146 a tonne. Copper falling more than 3%, while gold futures fell 2.5% to $1,863 an ounce. And of course, all eyes today on the Reserve Bank, handing down its key interest rate decision at 2:30 Eastern. Most analysts are clustered around a 15 basis point hike to bring the cash rate back to 25 basis points. However, there are a few on either side looking for no change, or at the other end, a more hawkish 40 basis point adjustment. The Reserve Bank board decision is driven by a new set of bank forecasts with a much higher inflation profile and lower unemployment rate, most likely outcomes there. And that is your day ahead. See you again tomorrow.